state and local tax manager for the firm. And he's one of our remote workers based out of the Coralville area and is one of our key go-to professionals when it comes to taxes. And he keeps us updated for changes that may have an impact on our clients. Joanna will be assisting us with the presentation and monitoring the chat area for questions and issues. Everyone will initially be muted, apparently including myself. But if you've got any thoughts or questions throughout the presentation, please drop those in the chat area. And we'll try to make sure that we get those answered either during the presentation or at the conclusion. We are recording this session, so the presentation will be available later. And so once again, Scott, brief presentation. If there's anything you'd like to add regarding your experience with sales and use tax, please do so as you jump into the seminar.
All right. Well, welcome all. This is kind of a mid-level review. So those who are old aces at this, hopefully it's a refresher course. And for those who are new to sales tax, it'll be a crash course. So sales and use tax is a tax type, right? So like property tax is a tax type, income tax is a tax type. Sales tax has its own tax code, its own rules, its own filing frequencies. And sales tax is if you've experienced it, you know, it can be a puzzle. And the construction industry in particular is probably the most difficult industry. And the reason for that is that there are a number of moving parts, both from the contractor's purchase side as well as their sales. There's a kind of a saying in the sales tax business, it's hard to answer a question without the caveat of it depends, and it depends on those variables to see which way the transaction goes. And we'll get into those variables here. So sales tax is administered at the state level, at least in Iowa. You know, income tax is federal, property tax is county, sales tax is at the state level. And there is no federal sales tax, so each state, they have their own code and rules that govern that. And when you combine all the states and all the localities within those states, there ends up being about 11,000 taxing jurisdictions. So you can imagine the complexity that's involved here. Luckily, we're dealing with Iowa today. But Iowa is, as I said, notorious. Iowa, like most states, will tax the contractor or the contractors responsible, but Iowa makes some unique provisions about enumerated services and the distinction of, is the job a repair? Is it new construction? And again, we'll get into that. Sales tax, unlike property tax, you know, you get a property tax bill once a year. Sales tax is transactional. So it doesn't matter if you're, excuse me, buying a box of nails or a, you know, a flatbed of rebar. Every one of those transactions, it's either taxed or it's not taxed. And the significance of that, because it's dealing in high volume, is that if the internal controls are not set up correctly, you know, it can create mayhem in a short order. It's a bit like a wall that's out of plumb. You know, the higher you go, the more out of plumb it becomes. And sales tax is very important to states. In Iowa, the gross receipts from sales tax typically accounts for about 40 to 45% of the operating budget. And states are always looking, as you probably know, for new revenue streams. And so the taxing codes change quite a bit. So what is the difference between sales and use tax? So sales tax is collected and remitted by the vendor who is selling either and or a service or a product. So they're essentially deputized by the state to collect those taxes and remit them. If they collect taxes and don't remit them, that of course is fraud. Use tax is a bit different in that the obligation falls on the end user, as we say, or the consumer, to self-assess if sales tax is not assessed on their purchase invoice. So if there's a taxable event and the invoice does not have tax, the end user is responsible for knowing, do they need to self-assess and remit to the state or do they not? Okay, next. So this is an important concept to understand, and that's nexus. Nexus is Latin for connection, and nexus determines the obligation that a business has to collect tax. So the law of the land for a long time has been physical presence. So in this, so stated here, an office location. So I'm on the Illinois side of the Quad Cities. If I'm a contractor and I go into Iowa to build an addition on Mrs. Jones' home, I'm sending a crew in there. I've created physical nexus. In 2018, there was a major Supreme Court ruling, Supreme Court versus Wayfair. And the Supreme Court ruled in favor of South Dakota. And as a result of that, every state now has adopted its own economic nexus laws. And essentially what that means is that a remote vendor who sells into a state, if they cross the threshold, and again, every state has a slightly different threshold. Iowa's is $100,000 of gross receipts. Some states have a economic nexus threshold of, New York, for instance, it's $500,000 and it's tangible personal property. Some states have a transaction count, so they may not meet the economic, but they meet the transaction threshold. Some states it's gross receipts, other states it's taxable. The significance of that is, of knowing that, is that if you receive an invoice from a vendor and there's no sales tax on it, it may be that that vendor does not have physical or economic nexus, in which case, you should be thinking, do I have a use tax obligation, meaning you're going to self-assess and remit the tax on that transaction. Okay, next. So in Iowa, the sales tax rate is 6%. And that is both the sales and the use tax rate. There's some confusion that what the use tax rate also includes the local option, and the local option. So you have the state tax, and then you have that local option tax, which is 1%. And most counties have a 1% local option tax. And these taxes are administered by the Department of Revenue. So when they receive that 1% local, they distribute that at the county level. All right, next. So this slide, this is from the DOR website, and it's a handy calculator determining the situs or the jurisdiction where taxes due comes down to the zip code, and preferably the 9-digit zip code, to really drill in and make sure that that jurisdiction is being assessed correctly. This calculator also, it has this feature where you can enter the taxable amount, the zip code, and it'll spit out the information in that particular jurisdiction. So this is a good resource to know about. All right, next. So who is a contractor and who's a sponsor? So a contractor is anyone that is providing the labor, or as we say, who's providing the verb and who's providing the noun. And we have to make that distinction at a sort of a minutia level. Contractors can include those that are listed, as well as a sole proprietor. The sponsor is the person who's having the work done. So Mrs. Jones is having that addition built onto her home. She is the sponsor, and the entity doing the building is the contractor. Okay, next. So what constitutes a construction contract? It is an agreement that the contractor is going to provide both the labor and the materials to build a structure. And that always involves taking tangible personal property. And in this example, you have as we say, TPP, the tangible personal property of a concrete block and mortar, bringing those together and incorporating those into real property. Okay, next. So this slide and the next slide is just a list of activities or verbs that a contractor provides in a construction contract. Take a second and look at those. And then Joanna, the next slide, it's just a continuation of more of those activities or verbs. All right, next. So in Iowa, there's 4 different types. The department distinguishes the 4 different types of contractors. And the reason for that is that each of them has a particular obligation in how they purchase their materials and supplies and how they bill their customer. And sometimes, you know, we'll get into that. They sort of occasionally they'll bleed from one to the other, but the department really likes to have these categories or an entity stay within the category that they've chosen. Okay, next. So this first one is good old-fashioned construction contractor, and their responsibilities excuse me. Okay, their responsibilities, they are the consumer of those building supplies and materials. So they are paying tax, whether they're paying sales tax to the vendor or they're self-assessing and paying it to the department. They are the end user. Materials that are delivered into Iowa, those are subject to tax as well, whether they're paying it on the sales side on an invoice or again, self-assessing. Materials that are purchased out of state that will ultimately be used in a construction contract, those may, and again, referring back to the economic nexus, you know, it's something to be aware of. If there's no tax, you need to make sure that, do you have an obligation as a contractor to be self-assessing? And if you're self-assessing and paying, you also need to have a sales tax permit. Okay, next. And this example is of a contractor, EFG company. So they have no retail outlets, so they're not selling to the public. And they're not taking inventory out and selling it to others, whether it be another contractor or a consumer. However, as I stated, when they do, there is a mechanism where they can remit that tax to the Department of Revenue. So essentially, they are the end user and they're responsible for paying sales tax in those contracts. Okay, next. So a contractor retailer. A contractor retailer is typically they have a storefront. They're selling to other contractors. They're selling to the public. They're making their purchases with a resale certificate. So when they make an order to their vendor, they provide them a valid resale certificate. And in Iowa, the resale exemption certificate is 3 years. Most states, they don't have a time limit, but Iowa does. So it's something to be aware of to keep your files in order and make sure that those exemption certificates are valid time-wise. In addition to it's filled out properly. We see exemption certificates all the time that they're not dated, they're not signed, they're not filled out, and under audit, an auditor will pull that and keep that as an open item until most states will allow a contractor to go out and get an updated certificate.
So Scott, interject real quick. So it's really up to that contractor retailer to retain those exemption or I'll say exemption certificates on file. So in the event they are audited, they've got documentation that they'd received something from the consumer side.
Yes. Yep. Yes. Yeah, and likewise, so they're purchasing product without tax, so it goes into their inventory. When they pull that inventory out to sell it, they're going to collect sales tax from the end user. When they withdraw inventory to use it in their own building project, they're going to self-assess in a new construction, and we'll get into the discrepancy between a repair and a new construction. And this is we're one of those areas where Iowa makes distinctions, and it's very important to know these. Okay, next. So this next one is an example of a contractor retailer, ABC Company. They have a retail outlet. They're selling lumber. And like I said, if they're going to sell that lumber to me, from the public, they are going to self-assess. They're going to assess sales tax on that invoice to me and then remit it to the state. Likewise, if they pull that lumber to build an addition, they are going to self-assess because they are the end user in a new construction contract. Okay. Okay, next. So again, the kind of go over their responsibilities, a contractor retailer. They're purchasing their supplies, materials tax-free with that resale exemption certificate. They are collecting sales tax on the end user from the person that comes in to their storefront to buy it, or if they're pulling it from inventory, they're self-assessing use tax. Now, if they're going to do a repair job, they are going to sell, they're going to itemize on their invoice to their customer in a repair situation. They're going to itemize labor and material, and they're going to collect tax and remit it to the department. Okay. Next. So what does repair mean? And we'll get into what is new construction, but repair means the following. You know, they're repairing something that was broke to an existing structure. It doesn't have the scope, the size of a new construction contract, and in that situation, it is repair, and they are invoicing their customer sales tax. Okay, and I apologize if I sound like a broken record, but this is a very important distinction to make here, the repair and the new construction. Okay, next.
Hey, Scott, before you jump forward, who determines that repair versus new construction or reconstruction? Is it the person performing the work? Typically, they would know, hey, I'm replacing these kitchen cabinets was an example you had there. And those were defective cabinets and time to replace them, versus somebody says, hey, I want to remodel my whole kitchen. Is it usually the contractor performing the work? Because it's probably pretty hard for the consumer to know all the rules regarding sales and use tax.
Yeah, it's basically 100% on the contractor to understand this. And there's a slide a few forward here that goes into, well, we'll get into how to make the distinction and the variables to consider when looking at at new construction. Yeah, okay. Next one. So yeah, and so the default is the tax. If there's ever a question, the default is to tax, to play it conservative. And in the situation where say a contractor invoices Mrs. Jones for that addition, Mrs. Jones has a mechanism to file it's a form 843 with the Department of Revenue, and to claw back that sales tax that was inappropriately assessed by the contractor. Okay, next. So the last type of contractor here is a manufacturer contractor. An example of a manufacturer contractor would be, say, a batch plant next to the highway that's mixing concrete. That would be a manufacturer, but they also may be using that concrete for their own use, to build roads, whatever. In that situation, when they are making when they're making sales, new construction, they are the end user in that scenario. If they're going to sell their product to another contractor or a consumer, they are going to they're going to assess you, they're going to, excuse me, they're going to assess sales tax on the invoice to that consumer, whether it be the contractor or the public. Okay. Next. So there's a distinction how, if primarily a manufacturer, they're computing their cost as it says here on the materials, labor, the power. If they are primarily a contractor, it's on the raw materials. Okay, and this, these sort of diving into this becomes a bit of a rabbit hole. And this is sort of where the mid-level review, we're not going to go into the details here of this because we can get off track very quickly. So again, there are a number of issues to review in a manufacturer contractor sales transaction. Next. So as I said, in a new construction contract, they're not collecting from the final consumer. They are the final consumer. Okay. So they are paying the sales tax on that. If it's, again, repair, they're drawing that out of inventory, and they are charging sales tax on their invoice, and it should be itemized labor and material. If it's lumped together, it would be the entire transaction would be taxable. Okay. All right, so these are, as I alluded to, Iowa is a bit different than most states in that they list, the department lists enumerated services that are taxable. So not every service is taxable, but those that are enumerated are. And where this becomes particularly complicated is that the taxable service may not be taxable if it's a new construction contract. Okay. Next here. So when are the services exempt? So the services, the taxable enumerated services are exempt when a contractor is involved in a contract that involves new construction, reconstruction, alteration, expansion, or a remodel. All right, next. So again, these are the services that are typically taxable unless it's new construction. Okay. All right, next. So how to evaluate whether a job is new construction. Again, as I mentioned, when I say new construction, I'm sort of using an umbrella term to include all of these. So some of the examples here, building a garage is new construction, or adding onto that garage, or adding the garage to, or adding a garage to an existing structure would be new construction. Adding a deck that was never there, that's new construction. Replacing the entire roof is reconstruction. Adding a new room to an existing building is new construction. Interior wise, putting up a new wall would be considered alteration. And as Steve had mentioned, replacing kitchen cabinets that are not defective is new construction. And there's an example here coming up of what happens if something is replaced that's defective. Okay, next. So here's some more examples of new construction. Paneling an existing wall, laying a new floor, Reconstruction is, natural disaster type of thing. Adding an expansion to or a new wing to a building is new construction. A modular home, the foundation is new construction, and this, what I have red highlighted is what I was referring to. So you can see replace an entire water heater or furnace, central air that is not defective is considered reconstruction or remodeling. So, that of course raises the question of what happens if it's replaced and it's not defective. I mean, it is defective. That is a repair. So, if your furnace is going out, if you replace it, that's new construction. If you wait until it goes out, that's a repair. All right, next. So some of the variables to consider to determine, is it repair or construction? Is the service performed closely with the construction activity? So in the example here, excavating and grading of land, which is a taxable service if it's in conjunction with a new construction contract, that service is exempt. So if a year later there's work done on the seating because it didn't take off at the time of the new construction, because of that, the time period involved, time would have passed to the point where the department would consider that not related to new construction. Next. And so another factor to consider here is the physical relationship. And I'll say that mechanical contractors, contracting is complicated enough, but mechanical contractors, that may be the most complicated industry with taxation, because you're dealing with equipment. There's a lot of things to consider with the scope of the project. And as mentioned here at the second bullet point, again, it's the size of the job. And then the sort of the easy example here, a missing shingle is going to be a repair job, but as we mentioned before, replacing an entire roof is new construction. Okay, next. And yet more factors to consider here. And again, this furnace issue, if it's not defective, but it's replaced, that's new construction. If it's broken and replaced, it's repair. And again, capital improvement. Again, these factors need to be considered to determine how it falls on the scale, repair or new construction. And as you can see, there's a lot of gray area here, right? There's a lot of gray area in determining scope. And there's a lot of factors to consider. And you as a contractor need to be aware of that so that you're appropriately invoicing, both invoicing your sales as well as your purchases. So these particular services are never subject to tax. And included in there are architectural engineering, professional services are never subject to tax. It's like the time where you start thinking you can figure out the next step intuitively, you get stuff like this. And so it's sort of like you either know it or you don't. So it's important to understand this. Okay, next one. So if in this situation, if there's two things occurring, you have a new construction contract, but while you're there, a window is broken in a separate part of the facility, the home, that would be a repair. So in this situation, you're going to have a new construction transaction invoice and you're going to have a repair invoice. Both, as you know, both of those are taxed differently. Okay. So the broken record again here, depending on the type of work being performed, materials are either paid by the contractor or they are assessed to the final customer. Okay.
So Scott, I don't think you are going to get into the details on this particular piece, but I just want to ask at a high level. It seems like sometimes nonprofits believe that their work is not taxed to be taxed for the services provided, and that's really not the case for construction related activity. Is that correct? For example, you build a church for them. The contractor still has to buy the material and pay the tax on the material, even though the church itself is part of a nonprofit agency.
Yeah. And we'll get into that here in a bit here, but non-for-profits are particularly tricky. Just because they have a 501c3 status does not automatically entitle them to the Iowa sales tax exemptions. Now, of course, if that church is being built and it's new construction, the contractor's paying the tax on the materials and the services are exempt. So in that regard, it's no different. Okay, next. So there hasn't been a whole lot of updates in the last couple of years with the sales tax code as it relates to the construction industry in Iowa. Several years ago, the department made a ruling on grain bins. And again, go ahead, Joanna, and advance here. Okay. Yeah, if you can go to the next one as well. Thanks. So, a contractor building grain bins, these are the particular activities and materials that are exempt. Now, it's important to know that in order to take advantage of this, the farmer, and that's how the department refers to the entity providing the agricultural exemption as a farmer, they need to provide the contractor an exemption certificate. Okay. Next one. And again, this is taxable property. So, you either know it or you don't here. So like scalers and weighers, those are taxable property, but the foundation of those is exempt. Okay. Next. So the department made a distinction a couple of years ago about who is a manufacturer and who's not. And part of the reason for that is that manufacturers have exemptions that are specific to them. And so the ruling distinguished what percentage of the business a manufacturer needs to be doing in order to qualify for those the manufacturer's exemption. Okay. Next. Again, these are someone who's 100, who is more than 50% of doing manufacturing, does not include these particular types of business. And the significance of there is over 50% is primarily. Okay, next one. So this was an interesting case with this was Lowe's versus the Department of Revenue, and reading through the court documents, it's a bit like a sales tax whodunit. Essentially, what happened here is that the scope. Go ahead and advance it. Really what came out of this is defining installation and the scope of a project, that even though these things being the second or the bullet point down there with dishwashers, garbage disposal, even though these are being incorporated into real property, the scope of the installation did not rise to the occasion of new construction. So repair and installation of these type of fixtures is considered a repair, and it's taxed that way as well, like a repair project. Okay, next. So building supplies and materials. Building materials are incorporated into real property. They become part of real property, and building supplies are supplies that are used in performing that service. Next here. And here's some examples of building supplies and materials, and I have there in red font. So a cleaning compound is a supply, and the other example there is lumber. That's material that's incorporated into real property. Okay, next. So here's some more examples of supplies and materials that are incorporated into real property. All right, next. And so next, yeah, there you go. Thanks. So, oh, I'm not advancing mine. That's what it is. So floor coverings are kind of tricky. The new type of flooring, the floating floors, those are not subject to tax unless they're purchased for resale. And this becomes a bit complicated with who's buying the carpeting, who's selling the carpeting. This is an area that you can kind of go down the rabbit hole in determining the taxability of floor covering. Next one.
Say, Scott,
Yes.
before you advance, or as you continue this topic, you've talked a few times about the importance of itemizing an invoice between the labor and the material components. And based on that example on the carpeting, it seemed like that would really be important to know what component of the total cost was labor and what the component was materials, or the carpet in that case, to know the tax was appropriately applied.
Yeah, so the service of the service of installing a floor is always taxable, but the way the materials that is itemized to the end user. So in this next slide, or I'm sorry, it's I apologize, Joanna. Yeah, so in a situation where a contractor is building a spec house, they are the end user. The house hasn't been sold yet, so they are the end user. They're the ones that are paying sales tax on that material. Okay. Next here. So building equipment are the following. They don't become part of the property, but they're used in performing that construction contract. So a contractor is the excise tax, a 5% excise tax is assessed for the purchases of these of building equipment. The second bullet point, I want to make sure that this is understood, because this is an opportunity for possible refunds as a contractor. So if you rent building equipment, go ahead and advance to the next one, Joanna. So the rental of these types of machinery and equipment, if they're used in a new construction contract, they are exempt. So the significance of that is that if your rental company does not know this distinction, they're defaulting and they're collecting, they're assessing you on your invoice sales tax. So you, as the user of these in a new construction contract, can file a refund. And I had mentioned that that form 843. So you could file that with the department and get a refund on all the equipment that you have rented in a new construction contract. And that look back period for a refund is 3.5 years.
And Scott, again, you're broadly using new construction as the term that really means new construction, reconstruction, and alteration, correct?
Yes, remodeling. Yes, that's correct. Yep. And that's why it's very important to understand those distinctions that make up new construction. Okay, the next slide here. Yeah, so here are some more examples of the rental of these particular types of equipment that in a new construction contract are exempt. Okay, next. So I've mentioned exemption certificates. Iowa has one exemption certificate. A lot of states have a exemption for resale and exemption for this and that. Iowa has one, and all the different possibilities of that exemption are listed on that one form. So there's the resale that we have talked about here. And then so you have a resale exemption, and then you have entity-based exemptions. So an entity, as I mentioned, the farmer gives you an exemption certificate to purchase those exempt materials tax-free. And then there are those designated exempt entities, and in the new construction business, they are specifically listed, and those are listed here in a couple slides up. Okay, next one. So this comes up a lot. Just because a contractor has a resale certificate doesn't mean that they get to purchase everything for resale. And as Steve had mentioned earlier, a church is a 501c3, but that doesn't mean under the Iowa code that they qualify for materials being purchased tax-free for a project. Next. So one of the things, Iowa has a pretty slick system where a entity that's seeking an exemption certificate fills out an application, and the department will issue that exemption certificate. The that entity should provide their contractor with that exemption certificate. And the significance of that is that in the bid for that project, they do not need to include sales tax because there is no sales tax. Those materials are exempt. Okay. And here's a list of those entities that qualify, and note that they only include the following. You'll notice that hospitals are not in there. Next. And here are some more exempt entities. Next one, 56. Yeah, you can pass that. This gets a bit into the weeds. And these next couple slides, they just kind of go through the contractor's responsibilities with the designated exempt entity and how the process and the protocol works.
And
as I
Scott, that's
said-
a pretty important part, actually, when you look at the designated exempt entities, this electronic filing on the website to be able to provide those certificates that allow those contractors and subcontractors to buy the material tax exempt. And so again, it's really important to know who your customer is, what the appropriate rules are in terms of that taxation.
Right, and it's yeah, it's very important if your customer is saying they're exempt, to make sure that you have this in your work papers, because without it, the materials are taxable. And I see this has been an issue in a number of cases where there was an assumption that the materials, the contractor may have given an exemption certificate to a vendor. The vendors receive exemption certificates under good faith. And so it really becomes the onus of the contractor to understand the exemption process. And then this last slide, and yeah, so as I had mentioned before, the preferred method that a contractor goes through the sales transaction is with that state generated exemption certificate. However, as I mentioned in the case of Mrs. Jones, who was inappropriately taxed on her addition, she, as the consumer, can file an Form 843 with the department and be reimbursed for the sales tax that she paid on her invoice from the contractor. Next, and I guess last here, yeah. Next. So we have a few minutes here. Joanna, do you?
Yeah, Joanna, have you seen anything pop through? It doesn't look like there's much in the chat. If you've got any questions you'd like to post, please feel free to do that. I also understand that we're right at the hour that we promised that we would try to maintain, but if anyone's got any questions, drop those in and we'll see if Scott can answer those for you. In lieu of that, I'll touch upon this and say that, we've really addressed a lot of sales and use tax related topics here within a very short time span. And Scott, thank you for providing us that insight and expertise. We hope as clients and potential clients and participants on this webinar that you have some takeaways from this information that was shared. We know you work hard to make your money. When you consider a 6% ding on materials that maybe shouldn't be taxed, that can really impact your bottom line. So we're here to help you hang on to that money as much as possible by making sure you appropriately account for the taxes that are due. Certainly, as tax laws change and the business evolves, the impact of taxes, tax credits, and tax refunds can be very important. It is a complex area, and we've got a group at Bergen KDV that specialize in the sales and use tax, the local taxes as well, that really might be able to assist you. We've had a number of people and clients, as Scott had mentioned during the presentation, that have been impacted by particular treatment for sales tax that may not have been correct, and we'll be helping them file for some refunds related to that. Not seeing anything else sitting in the chat. Thank you for joining our webinar. We know you've got a choice to make and how you spend your time. We appreciate you spending some time with us as we try and provide solutions for you. Please feel free to visit bergenkdv.com. And certainly the recording that we had here, we will get distributed when that's processed through and get that to all the individuals that registered. So again, thank you for your time and appreciate your participation today.
Also, a reminder, a copy of the slides will be included along with the recording of the webinar as well. So thank you so much.
Have a great day.